Stablecoins could change the entire FX industry and make it far more transparent, far cheaper, far faster. Solana blockchain could accelerate transactions 100x. You can't do it without regulation. Let's embrace regulation. Now, there are other voices within crypto that want to rage against the machine. That's not my voice. My voice is, let's work with regulators. Let's make this a multi-trillion-dollar industry. Let's make this better for every person on earth and provide transparency to the regulator in the way it should be. What's wrong with that? Nothing. And my investment thesis, by the way, is that's coming and it's going to appreciate crypto assets dramatically.
One of the reasons that we know that politicians have been getting behind this is because it's a tremendous cash cow in terms of taxes. And we heard from Yellen today saying taxpayers should receive the same type of tax reporting on digital asset transactions that they receive for transactions in stocks and bonds so that they have the information they need to report their income to the IRS. You saying this is a good thing?
100%. And if I could be the industry spokesperson for just a moment, we agree, and we're going to do that. All the companies that I'm involved with in centralized and decentralized, like WonderFi, for example, which is under the Canadian order, we are already writing that code. We are going to be 100% compliant on tax reporting in every jurisdiction we're licensed in. I 100% agree with her. The industry wants to be compliant on that. Tax is, we understand we have to pay taxes, and we're all okay with that. Now, there may be some cowboy outlier that doesn't want to be controlled by a government. That's not me. That's not the industry. We want to be compliant so that we can have the opportunity to allow institutions to invest along beside us. That's going to provide the stability and the appreciation in value. The majority of the world's wealth is tied up in sovereign funds and pension plans. They vote with their investments. They want regulation. They want stability. They want transparency. They're willing to work as they have for hundreds of years on providing security to people that trust them to manage their money. And if there's innovation and technology available in financial services, it's coming through crypto. This is an augmentation to an existing system that has trillions of dollars in it. It's not a new system. It's a system that makes the existing system way better. That's the way you have to view it as an investor. And so all we want is to be compliant within the existing ways. We don't need to change everything overnight. That's not the way to think about Bitcoin or the entire crypto industry. It's to take the innovation that exists here and augment the existing system to make it better for people. And I'll give you an example. Stablecoins could change the entire FX industry and make it far more transparent, far cheaper, far faster. Solana blockchain could accelerate transactions 100x that are already, it takes you days to get your money moved from one bank account to another in a foreign country. How inefficient is that? It could be fixed overnight. You can't do it without regulation. Let's embrace regulation. Now, there are other voices within crypto that want to rage against the machine. That's not my voice. My voice is, let's work with regulators. Let's make this a multi-trillion-dollar industry. Let's make this better for every person on earth and provide transparency to the regulator in the way it should be. What's wrong with that? Nothing. And my investment thesis, by the way, is that's coming and it's going to appreciate crypto assets dramatically. The airline industry is never going to be carbon neutral, no matter how many carbon credits they buy, and everybody knows that. But until there's an alternative way to fly, we have to live with that. Bitcoin mining, on the other hand, there is an alternative way, and this is why institutional capital is going to go to the alternative way, and that involves nuclear power and hydropower globally. So, in northern Norway, in northern Quebec, in Montana, in North Dakota, in upstate New York, these are places where there is an abundance of hydropower, and much of it, in some cases, unused. So why don't you just take a turbine, connect it directly to a computer that can basically hash out Bitcoin, and start being awarded coins that are 100% ESG compliant. There's no need for a carbon audit. Then you're not in this debate with the SEC or the POTUS order or BlackRock because you've done it with excess hydro or nuclear power. The public company's auditor to sign that. If you're doing that right now, if you're using carbon offsets in any industry, you better read that memo from the SEC. That should make you really nervous.
If the SEC puts together some regulatory body that oversees carbon credits and it's more formal, does that market have hope then?
You know, this is a classic case where you have to read the room, okay? Listen to Larry Fink, listen to the POTUS executive order, read the memo from the SEC, and realize the public sector and the private sector is getting together in a rare policy to move us away quickly from hydrocarbons. The only debate we have on this topic is how fast we can do it. And I think we're learning we can't do it as fast as we hoped.
Right.
But all this initiative around, for example, in America, 90% of the dams made in the last 120 years contemplated hydroelectricity, but they never installed the turbines. Well, right now, I'm going to start installing turbines because I want to build data centers.
Okay.
So it makes economic sense for me to do that because I know that I can't get institutional capital into the data center market if I'm burning hydrogen or dirty hydrogen or dirty hydrocarbons. This is policy. So if you think you can carbon credit your way with mangroves out of that mess, I don't think so. Gold example is not a parallel analogy, and I'll tell you why. There's only a single use case for gold, storage value. When you build a Bitcoin mining facility, you're essentially building a data center. The new oil is data. Where do you store it all? Every country now, particularly after what we saw in the Ukraine, wants to store the nexus of their citizens' information in all sectors of their economy on their own soil. The demand for data centers that are built on an ESG mandate, in other words, hydro or nuclear, is huge in every country. If you're Brazil and you're licensing crypto exchanges, you want all that data in Brazil. Luckily, they have tons of hydropower. If you're in the state of Montana, they want data centers to supply data centers to all the industries there. So Bitcoin miners have the option to look at the economics of whatever the price of Bitcoin is and say, well, that's more attractive right now than providing data storage, or vice versa. So all of these new centers being built off hydro and nuclear are basically infrastructure. That's the way I look at them. So if it makes sense to mine Bitcoin, and I personally think anything over 50,000 or close to it.
So 50,000.
But we're sitting at 43 and change today. But when I look at the models that for the returns on what I'm investing in the Norway facility at BitZero, for example, I'm happy if Bitcoin stays at 50,000 for a couple of years. That's great returns for me. But it's forcing everybody to make better computing power and figuring out a way to use the center for other uses. In the case of the Norwegian village where that BitZero facility is, they're providing computing power for the local university. They're taking the heat off the stacks and growing tomatoes with a canning center beside it. The community is involved. This is the new way of data centers. So when we go get licensed in other states, we're just showing them the Norway model, saying, let's take those containers and take similar containers and put them on your facility and we'll abide by all the local regulations.
But if Bitcoin drops below 30,000, 25,000, does that start to concern you in that business model?
Of course, and that could happen, but I've built a state-of-the-art data center. I think I'm ready to lease it out to Microsoft or to Google or to Ford or to Tesla or to all of these companies that are storing data by the gigabyte every week.